Turning now to the business of energy. Taking a look here last week, the IEA said world oil demand will climb by 2 million barrels a day in 2023 to a record 101.9 million barrels a day. Now, that kind of demand would be great news for the oil majors and the businesses that provide the tools for them to operate. There are other positive signs. Rystad Energy says companies are planning bigger offshore investment in the coming years. Now to SLB, formerly known as Schlumberger. It beat the street with its latest results while seeing a positive outlook for the months ahead. Joining us now is Katherine Olexa, Morningstar Energy Equity Analyst. So I first want to start with SLB here and talk about the rating that you have on it at the moment and the sort of expectations that you have for the outlook now.
Sure. So we expect 2023 is going to be pretty strong for SLB. They had a really great end to 2022, and we've seen a little bit of weakness this quarter just due to some seasonal reductions in activity in several of their regional end markets. But we expect that that's going to kind of come back starting this quarter and beyond. We basically estimate about top line growth around 18% year over year for 2023. And then we expect that to average about 10% over the next 5 years or so. So pretty strong runway for growth moving forward. And then in terms of profitability, we expect that it'll improve a little bit this year as well. We're expecting about 24% adjusted EBITDA margins for 2023, and then expect it to sort of remain there moving forward.
And I understand you have an equivalent rating system here. Break that down for people who are trying to sort of follow along so they can see the opportunities.
Certainly. So the Morningstar star rating, basically 3 stars is going to be a neutral or a hold rating. And then anything that's 1 to 2 stars is equivalent to a sell recommendation. And 4 to 5 stars is going to be equivalent to a buy recommendation. So right now we have SLB at a $56 fair value estimate, which places it around 3-star territory today.
So for people who want to invest in this space, I mean, you have the individual oil companies and then you have sort of the refiners, you have the other elements in it. As you look across the supply chain there, where do you see the biggest opportunities in the next 3 to 6 months?
So for SLB specifically, offshore is going to be a really strong end market for them. They have some pretty decent exposure in that space, just in terms of subsea equipment, and then more general like well construction services that they provide. That's going to be a really strong avenue of growth for them over the next several years, even into 2025 and beyond. The second area for them that will be particularly strong this year and already has been demonstrating some pretty great results is in the Middle East. And management on their call today actually indicated that they could see record revenues from the Middle East this year. Right now, that region represents a little bit under 1/3 of their overall revenue. So those are 2 really big bright spots for Schlumberger and the industry as a whole in 2023 and beyond.
And so as we broaden it out to look at the broader industry, I mean, there's a lot of expectations here, but looking at the oil prices, you have what might happen when China comes into full flow with demand as well. And that's really a harder one to gauge, and sort of any other geopolitical issues that might come up, and also sort of currency pressures, what the central banks are doing. How should people be investing in this space if they're trying to perhaps be a little bit defensive and sort of avoid some of the risks here when you do have such fluctuations?
Yeah, so I would say it's probably tough to invest in the commodity space if you're wanting to pursue a more defensive strategy. But, you know, for Schlumberger moving forward, SLB, I think it's going to be, I think their main driver to pay attention to is going to be overall industry capital expenditures rather than some of these more near-term geopolitical developments and things like that. Because once SLB locks in these contracts, for the most part, that revenue is going to be pretty much secured for the year. Obviously, that might lead to further disruption a little bit further down the road. But in terms of the next 3 to 6 months, I think that it's going to be a pretty solid performance for them, just because we'll have some of those the adverse impacts from seasonal operations and weather, things like that, are going to sort of alleviate in the second and third quarter, which will provide some pretty solid runway for better performance in the near term, as well as just overall elevated industry activity and investment.
Well, thank you so much. We do appreciate getting that outlook out there for us. Katherine, Olexa, Morningstar Energy Equity Analyst. Thank you for joining us this morning.